Good evening, everybody. Still here. Daily Market Pulse. Wednesday, December 11, 2013. So this is, we were talking about there's some perhaps possibility of a rollover that things were looking like maybe like a muffin top, and that with the number of distribution days and the way things were looking, it was a possibility that we might start seeing some selling occurring. And here it is. Market's under pressure now as a result of the big sell-off today. We got another distribution day on the Nasdaq, high volume across the board. The S&P didn't gain one because it lost one and gained one at the same time. But those are high numbers, and with a big sell-off today, even there's there's a likelihood of a bounce. Not seeing it recover because the VIX was pretty outrageous. We're going to look at that, of course, in a minute here as well. But not looking too good for the bulls at the moment, anyway. We'll see if they can recover, but I'm thinking not necessarily. So not so good for the bulls. So let's look at the charts. So down the screen, we knew that we had some trouble at the top, doji, shooting star at the top. Signs of certainly profit taking at a minimum. We had the sell-off coming down, a little bit of a bounce. Beautiful move here on that Friday, but they really couldn't advance thereafter. There was no real follow-through. The Bollinger Bands were still tight. They needed to really get it up there to get back to the, especially after a big move like that. There needs to be a follow through, and there's absolutely no follow through. So at this point, under pressure, they break below the lows here at about 15,820. It's done. That Bollinger Band is going to open on the bottom side. It's going to be heading toward the 50-day moving average. You'll be looking at 15,700 pretty quick, I would think, and that could happen, quick tomorrow. Friday. We'll see how that goes. So that's it. It's do or die now for right now for that sake. So again, the high distribution count. I should probably show you the put call ratio as well. That is absolutely at a point where it's really toppy in the markets. So I'll show you that after I show you the indexes. I think here. So that's that one. Let's look at the S&P. Okay, S&P. You can see we had a kind of that horizontal resistance at the top. There was doji, spinning tops, etc. Then there was a nice rising window that occurred on Monday following the big Friday move, but it never made a new high, and the Bollinger Bands weren't opening. And of course, we were looking for support into that window, which it did temporarily, but then that's it. It never held today. It went below Friday's low and didn't quite make a new low. I don't think. Here, let me see. Low was 1780.09. Yeah, not quite, but pretty darn close to the low of last Thursday, a week ago. So now, of course, the change of polarity area is in question. 1775 becomes a big area. See, the Bollinger Bands are very tight, so it starts flushing through that area. You're looking at the 50-day moving average. You're looking at 1750 to 1745 pretty quick. The window across here as well. That happens to be at 1734 approximately. Let's put that in there. Like that. That's kind of what you're looking for right there. So it might be a measured move just by the width here, the vertical width, 1811. We'll call it 1810. Let's call it 1780. So 30-point move would take you to 1750. So you'd be looking at that 17, right around the 50-day moving average, near the lows as I mentioned before. Maybe not quite as low as 1740, but certainly that's where you'd be looking for initially as a downside move. Okay, so Nasdaq, it might bounce, right off this polarity area, but we'll see. So there again, bearish engulfing could not surpass it. Hanging man, spinning top, doji areas right here. So that's where there's a possible iffy trouble. It's like do or die. It needs to go or forget it. And it broke below the 8. It came into the 20. It broke down. It's a pretty good sell-off. It was just gradual and continuous all day long. They weren't letting up. It wasn't a big whoosh or swoosh. It was just very methodical and almost planned. So the 20s there, you're coming maybe a little bit lower. The next level might be, well, that's pretty much it. 4,000 is right where it is right now. That's the first place, 4,000. After that, you're looking at 3960, 3970 to 3965-ish, somewhere in there. And then, next level would be 50-day moving average and as deep as maybe 3,900. So we'll look at those levels next. TSX fell pretty hard. So you see that we talked about the possibility that maybe this was already rolling over, causing some kind of a muffin top right around the top. So we certainly saw a lot of rejection, shooting stars, and so on at the top here, including another rejection on a nice big push bullishly on this particular day on the 29th of November before things started to come back toward the support and possible neckline. It flushed through a couple of days, came back. Wasn't very convincing on the snap back in, so it was either going to, because of the rejection even on those upper shadows, so it needed to go or it may not. So there's the failure, making a new low as well. So this is looking like it's going to kind of tumble. Now the only thing that may be a possible saving grace is the fact that you got a series of lows coming down this way, and for the time being anyway, you've got a positive divergence. And after a big flush like that, you might in fact see a little bit of a bounce, but don't hold your breath just yet. So keep an eye on that one. Let's take a look at the US dollar, Canadian dollar pairing. That continues to fade. We said it might come into this red line, which it has so far, 106 or so. That's good for now. If it breaks that, lower, but after 5 downside days, 5 red candles, at some point this is going to bounce. The size of today's candle may tell you, especially with the upper shadow, may tell you that at least the buyers are at least still around, and they may take this as a bounce tomorrow. Probably worth looking at the euro as well. Euros continue to way up, and we said we're looking at a target up here that, as green as all this has been, at some point there's going to be a pullback expected, but it's going to likely at this point just go for the target, and then at that point decide what it's going to do. So right now, no real sell signals. Right, there's no sell signals here. So until you see something, you continue to stay long into that area, but this is not a time to be buying. Let's put it that way. Treasuries. Treasuries broke out, we know, yesterday above the trend line into the 20, but it needed to continue through that. Now it did gap lower on the open and finished lower than you were lower today. We expected it might still kind of come back and test that area. So I'm not fully convinced necessarily that it's done and dead. This could just as easily come back toward 130 again and retest. We said that's possible, and so that could still happen again. So remember the reversal that occurred a few days ago was not exactly classic in any nature. It was a high wave of sorts, spinning top with a very large upper and lower shadow, a gap higher open, then a nice candle yesterday, but that's about it. It wasn't a very convincing reversal. So we may see a pullback, a retest of 30, and then we'll see what happens once it comes back into that area. So just be careful with that one for now. Until you see a true direction. Right now the direction overall is still to the downside until proven otherwise, but it may reverse quickly. So anything above yesterday's high is probably going to be good to go to the long side on treasuries. Let's take a look at, well, the yen. The yen has been certainly retested the bottom here, bullish engulfing, a fairly decent continuation today, and it's gapped higher again after hours. So still think this is going higher. Some are thinking this is actually going lower and a lot lower based on some of the decisions the Bank of Japan is probably going to make. But based on what I'm seeing here in terms of formations, I don't see that just yet until I see a break below the bullish engulfing from a couple of days ago, or actually, I'm sorry, yesterday, really, because that last candle is actually tomorrow's trading starting already. Until I see that, then I'm not convinced. But because I see it's the fact that we had a bull sash a week or so ago, and then a confirmation of that support area yesterday, and then a nice continuation, at least decent continuation today. I would still like to see everything close above the 8 moving average, but it did so a few days ago before the reversal down. But that was the start of the stabilization process. So anyway, with that said, I would still be looking on the long side until it's something really drastically weakens and then breaks below the bullish engulfing here on the yen. So let's look at gold. Remember, gold had a nice day yesterday, and it just paused today. Pretty much just a hodemy. It's bearish hodemy, mind you, but still, it's just a pause above the 20. The 8 moving average, remember, is still below the 20, so there's still time for this to sort of gather itself. But I don't mind gold here at all. I think it broke the polarity area. It broke the highs of 1250. It's testing 1250 now. It'll maybe test the 8 moving average as well. So I don't mind what this looks like. Gold looks still bullish to me for now, and silver will be looking the same. So you see silver, same thing, a little bit of a pause today on a gap higher. It finished higher anyway, finished positive, and then just a slight little pause here right now. The 8 moving average moving up pretty nicely. So everything still looks very bullish here on silver as well. And then crude. Okay, so with crude, we said, I was expecting a pullback. Remember, I was talking about this as the candles were coming up. It was getting fatigued into the 50-day moving average. I was a little surprised, quite frankly, to see it race up into 99. But I also had stated that it probably did that because it was so close to its target that it just went for a good swipe at it. And sure enough, look at today, dark cloud cover, pretty good reversal. So now the reversal, if you will, or the pullback, the retracement is probably in place to come a little bit lower. So now I'm looking for oil to finally come back down. 99 was the obvious target. It's going to come back down based on a retracement somewhere, probably around, well, it's lower than where it is now for sure. 50% would be right around 96 would be probably the lowest place I'd consider it. Otherwise, you're probably looking at about 96.50 to 97 maybe. But then, of course, after that, if it can get bullish again, look coming through back to 99, back through 99, and into the 101 area, then maybe 103 next. Let's quickly check on natural gas because it looked like it was going to be in a pullback. Okay, so a lot like oil, the target above was so close, even though there was a doji essentially yesterday, the target was so close it was likely going to go after it before at some point things would be taking a break or a rest. So it had a nice little pause on the first attempt, then raced higher into the area here where it is now. So look to see what it does at this level now at this point. If we load up the small caps at this point, risk on, and you can see here, risk on is definitely risk off. So I drew those channel lines, and I said also it's not following the channel very well. The lows are going perfectly, but the highs are not, and they are fading, and they really needed to get some muster here off this support area to really break up into 114 and then higher to catch up, and it's never really done that. Now it's broken down below the channel, below the 20, into the 50, into the next support level now. And the likelihood of lower lows in this case as well. So we'll see what happens with small caps, but certainly it looks like it's a done deal. It's on its way down. Same thing here with the transports. IYT went into the 1272. It never got anywhere. Rolled over, breaking support levels now, looking to go lower into the 50-day moving average, probably around 124 to 124 and a quarter or so, 124.50. Yeah, right around 124 or so. It would be right. Let's go to retail next. So retail kind of hanging in there for now, right? I mean, essentially it's in a box formation going sideways, back and forth. It didn't sell off very aggressively. So yesterday's candle was pretty impressive. It reversed pretty nicely, hammer-like formation, but it's holding. So this might be lagging the others. In fact, it might sell off tomorrow instead. The Bollinger Band's tight. A sharp, aggressive move is coming, and so you'd have to anticipate, based on what we saw today, that this is lagging and probably heading south. So look for some retail stocks to start falling apart potentially, if if the formations and candles are there to support it. SMH interestingly had broken up above this range, on a bullish formation, or an ascending triangular formation. Rising window we saw last time. We saw a gap higher again, but they were all profit-taking little candles after the moves higher. And then somewhat of a reversal back now into the window. So this window, the 8 moving average, the polarity area, all this should be support. It's either going to hold or forget it's going to get ugly. So you look for it for at least to hold temporarily, at least throughout the day, somewhat tomorrow, you'd think. It's that, or it's going to get ugly in a hurry. It's just going to be gone. Like it's just going to go, see ya, and it's out of here, all the way back down toward 40.50. So we'll see what SMH does. Let's look at the VIX now, because the VIX, what I mentioned was it got into the 15 area, almost 16 area, and then faded. Falling window. So that falling window, of course, you'd think a continuation of the downside. But with the markets the way they were, you had a rising 20 here. It was almost oversold. With the markets the way they were, anything could happen. It gapped higher yesterday, and then faded. So that would showed some signs that there's a little bit of fear present, but they needed to get through the window. And I said, if this thing starts to move through the window and can close through the window, it's done. That this is likely going to be going higher, 16, 17, 18 possibly. And so that's what it's looking like. It formed a nice rounded bottom here, and now tested the 20 and so on. So this is looking like it's about to take off, which then means, of course, the markets are about to collapse. So everything seems to coincide. I think at this point I'm going to take you to the put-call ratio. So some of you might be aware of this chart, some of you not necessarily. So I quickly just changed the, should not have been an 8 moving average. It should be that blue line at the top. That's a 5-day moving average. So we have the put-call ratio, and we don't look at the actual put-call ratio itself. We look at the moving average for it. So that's a 5-day moving average. In the middle, we've got the SPY, and then we've got at the bottom, we have the VIX. So we're looking for correlations or inverse correlations. So you see at the top here, where it went above 1 in this green area is also where the VIX spiked and peaked, and it was above the upper Bollinger Band, and that's essentially where we saw a reversal signal as well in the markets from a low to a high. Opposites, so that works really well for bottoms in markets. Tops in markets don't work as well, but when you get into this 0.7 to 0.75 area, you start seeing the markets maybe getting a little toppy, looking like it's going to at least pull back with a little bit of mild selling. And we've seen that. So certainly when you can coincide with the candle formations, it seems to work fairly well. So you see how low it is here. And it's the same token. One other thing you want to point out, we've talked about divergences. You can see there's a little bit of a divergence coming up this way, which means that with the markets going sideways, showing possible sell signals, that's likely. It means that the markets are about to sell off. Same token, we're seeing the VIX starting to pop a little bit. It was temporarily above the Bollinger Bands, and then that's why we saw the reversion to the mean. But right now, it's just absolutely, the bands are opening right now. And so we're seeing essentially, you're seeing the bands here are opening. So there's room for the VIX to go higher. And it's closed through the window at this point. It's done. That window is now negated and gone and past. And now we're looking for a continuation to the upside at this point. So it looks to me like there's going to be a lot more selling in the picture here. So it looks like grab onto your shorts and let them fall. Okay, that kind of covers the daily market pulse. We'll be back for that tomorrow.